I'm standing here in Dumbo with the Brooklyn Bridge right behind me. And since today's President's Day, I want to talk about something that most people don't associate with this bridge: presidential power, public credit, and capital markets. Because the Brooklyn Bridge isn't just an engineering miracle, it's a bond market miracle. When this bridge began construction in 1870, it was one of the largest infrastructure projects in the world. It took 13 years to build and cost about $15 million, an enormous sum at the time. It wasn't funded by a billionaire, and it wasn't funded by a private corporation. It was financed primarily through municipal bonds issued by the cities of New York and Brooklyn. Investors bought those bonds because they trusted something bigger than the bridge itself. They trusted American public credit. That trust traces back to the earliest days of the Republic. After the Revolutionary War, the United States was financially unstable. The breakthrough came when the federal government, under President George Washington and Treasury Secretary Alexander Hamilton, consolidated state war debts into federal bonds. That move created something new in the world: credible American sovereign debt. From that point forward, the United States could raise capital not just through taxes, but through markets. And once you have a functioning bond market, you can build things like this. The Brooklyn Bridge represents a model: political authority, public debt issuance, private investor participation, and physical infrastructure. Presidential legitimacy underwrites taxation power, and taxation power underwrites bonds, and bonds finance bridges. That's the American growth engine. And here's the part that matters today. Capital markets are really just systems for coordinating belief in capital at scale. In the 18th century, the innovation was federal bonds. In the 19th century, municipal bonds financed infrastructure. In the 20th century, equity markets financed corporations. Today, we're experimenting with a new layer: on-chain capital markets. Blockchains allow issuance, governance, and settlement to happen transparently and programmatically. Instead of paper certificates and clearinghouses, you have smart contracts and distributed ledgers. And instead of weeks to you can settle in minutes. At Tally, what we're building isn't speculative noise. It's infrastructure for digital capital formation. Governance systems that allow communities and organizations to issue, coordinate, and manage capital on chain. If the 19th century built steel bridges with bond markets, the 21st century may build digital infrastructure with programmable markets. Different tools, same underlying principle: trusted systems that allow capital to flow to ambitious projects. So on President's Day, standing under the Brooklyn Bridge, it's worth remembering: this structure exists because American institutions made public promises investable. The future of capital markets, whether municipal bonds or blockchain protocols, still depends on that same foundation: credible governance, transparent systems, and capital aligned with long-term building. I'm Dennison, co-founder and CEO of Tally, and we are excited to have you along for this vision.